It's Frontier Opening Bell, and I'm Temple Ashaju. We've got Bosin Amofaya, Executive Editor at Frontier Africa Reports, joining us. Ali Kansachu also joining us from Nairobi, Kenya, to give us the Eastern African flavor of the market headlines before us. But before we go into that, let's check in with the markets, where we've got Nigeria positive yesterday, marginally though, by some 0.01%. BRVM Stock Exchange was up by some 61 basis points. The Egyptian Stock Exchange went lower, 40 basis points. The Nairobi Stock Exchange slipped by some 12 basis points, while the Johannesburg Stock Exchange closed negative by some 26 basis points. Looking at the Eastern African headlines, we've got Kenya Airways, Congo Airways partnering on maintenance, training, and some other developments. Kenya's trade deficit widens by some 13.4%, so 198.6 billion Kenyan shillings in February. KenGen full year 2020 electricity revenue was positive by more than 13%. Uganda's lending rate now hit 19.9%, almost 20% for the month of February versus 17.4% for the month of January. And March Exchange, you have WM Med 7. Sorry, I'll take that again. WM Med 7 Limited, so pay first quarter dividends of some $0.0205 per share. That will be on the 28th of April. I guess that is Wednesday or so. Let's bring these headlines to you, Ali, for some digestion.
Good morning, Temple. Yes, let me start with the top headline. This is the partnership between Kenya Airways and Congo Airways, which really, in the scheme of things, was not the main dish that was served. The main dish was the visit of President Kenyatta on a state visit to Kinshasa to meet with President Tshisekedi. Lots of sort of background noise about this meeting. There was a theory that President Kenyatta was actually seeking to meet with President Farmajo of Somalia, who was there on the preceding day. And some folks were saying that had in fact, the main issue was this meeting. President Tshisekedi is keen to have Congo accede to the East African community. So that would be one of the ongoing conversations. And much was made of the visit by the president to the Equity Bank headquarters in Kinshasa. Dr. James Mwangi, the mercurial chief executive officer of Equity Bank, has made a major play in the Congo. 2 acquisitions, the last acquisition, a much bigger bank, if you look at the results that have been served up by Equity Bank, they seem to be doing extremely well in the Congo, where only 3 out of 10 people are actually banked. So he sees it as a big opportunity. His is a mass market product here in Kenya. He completely changed the game by allowing people to open an account with as little as $10 US. And basically, I remember him telling me one day, the opportunity I identified is the mass market opportunity. And, there is a massive population in the Congo, and if he can make his model work there, I think it's going to be highly successful. So, important visit, but lots of different threads running behind that. Kenya's trade deficit widening 13.49%. This is frankly mostly about the price of oil, which had rallied. You will remember we're around $62 on WTI. And that explains the sensitivity of Kenya to the price of oil. The last time the currency came under tremendous pressure was when the oil price surged above $80 towards 100. So Kenya has a high sensitivity to that price because that's our single biggest expense line item. We're cutting a check every month or so. KenGen had their AGM yesterday, I do believe. Strong results, but the challenge for KenGen has been its primary customer is Kenya Power, and Kenya Power has been a laggard in settling its bills. So there's a very big receivable on the balance sheet of KenGen, and it's been there for quite a while. KenGen has been looking to disintermediate Kenya Power and sell directly to its big customers, but the Energy Ministry I saw yesterday were not keen on that solution. Uganda lending rates hitting 19.9% in February. It's not cheap borrowing money in Uganda, as you can see. It's unfortunate. It's been an issue for the Ugandan authorities for some years. They've been trying to wrestle that lending rate lower, but as you can see, not very successfully. I'll just touch on a couple of other things. Cooking gas prices have been increased by $3.50 here. This was part of the reforms that the IMF has been asking for, which is to put VAT on cooking gas. This is going to hit the bottom of the pyramid quite hard, and the worry is that people switch to things like charcoal. Our forest cover is very low, and we don't want to be encouraging that development. And then just to touch on, I'm sure you've looked at it before, remittance inflows into Kenya have continued to outperform, up 17% in the first quarter of 2021 versus 2020. So that's also supportive of the shilling.
Impressive. Thanks a great deal for those. And Ali, Bosun, I know you love a lot of handshake. Yesterday or thereabouts, we saw a handshake between Egyptian Airways and Sudan Airways. Let's look at how you want to react to that of Kenya Airways and Congo Airways, and if you would like to see the Congo actually also acceding to the East African community.
I love the way the East African community folks carry themselves along, and Kenya, to a large extent, had never disappointed me on that political front in terms of widening the East African community, bring everybody on board, try to be the big brother there, try to play it very nicely, expand the economic and trade and investment frontiers of that region. If you add Congo to East Africa, look, that's one huge asset in your portfolio, considering the Inga Dam project, considering the mining activities. With East Africa already rich in agriculture and what have you, if you add the mining resources of Congo to it, it's going to become a bigger power block, economically speaking, that can take on Southern Africa almost at any point in time. So Congo is a very big addition. And I want a whole lot more of this. See, this expansion, I love it, because now we're beginning to see Africa do cross-border political, economic, social interactions, rather than everybody staying in silos that we've run for decades and decades on end. I want to see similar thing happen in West Africa. Nigeria, for example, should play such a very big role. But I want to ask Ali very quickly about the vaccine and the virus in Kenya. Where are we at the moment on this? And is this impacting sentiments on businesses, small businesses, SMEs, and all of that, and how people think about the immediate future?
Yes, our test positivity rate has been running in the range of 13.5%, top side 20%, but our sample sizes have been very low, between 5,000 to 7,000. So we're not really testing that many people. And the only way you can impute how bad the virus is from the test positivity rate or anecdotal chatter, which seems to indicate much higher death rate that's being reported, and also a high capacity utilization in the hospitals. And I think that's what drove the decision by the president to impose a curfew on these 5 districts, of which Nairobi is one. And really, if you look at those 5 counties, you're talking about the heart of the Kenyan economy. So you're talking about 55 to 60%. Now, extrapolating from there, obviously the economy has been under tremendous pressure. The high pressure points are tourism, where they've tried to, come up with sort of Band-Aid type solutions. But bottom line is, there is very little tourism flowing through. Agriculture is held steady. the SME sector, which really is the engine room of the economy, is the one that is suffering the most. And that's why you had such a visceral reaction to the proposed turnover tax, which was thrown out by the court, and the KRA is appealing it. But just to give you an indication, I saw data around fuel consumption just in Nairobi. It's down 15 to 20%. So if I look at that data point, I can extrapolate from that the economy remains very soft, pressure is very high, and it's not clear to me how quickly we're going to emerge from this pandemic, particularly because of recent reports coming out saying there is a new variant in Tanzania, which looks very virulent, and given the nature of our borders, I would have thought that could very easily spill into Kenya, because we have so much cross-border trade and cross-border activity. So overall, and then coming finally to the vaccination, look, you know, Kenya has a population of nearly 50 million people. We've vaccinated, I believe, I'm told, 700,000. This is, you know, you're neither here nor there. You basically protected 700,000 people, hopefully, but you're nowhere near herd immunity. You're miles off the ball. People are talking about, 21 million being vaccinated by 2023. So, you know, I think the story is an African story that, you know, our vaccine game, unfortunately, is not up there. And my concern is we end up in an Indian or Brazilian scenario with rampant mutant variations, and all of a sudden, you know, just like India was saying they bent the curve like Beckham, and then boom, you know, these pictures coming out of India are horrendous.
Thank you very much, Ali, for those contributions there. Let's move on now to the Western African headlines, where you've got Nigeria, Lagos, launching some 5-year agriculture and food systems roadmap. NGX listed Okomu Oil declares some 7.8 billion naira in profit for 2020. Access Bank's got Moody's Investor Service making a comment on its deal with BancABC Botswana. Moody says that it's credit positive. That move is credit positive. Cote d'Ivoire's Treasury paying 5.9% interest on its 2020 to 2030 bond. Ivorian banking company net income rises by 8% in full year 2020. Bosun, you got the floor.
Thank you very much for the Okomu Oil story. I think that's in the agro-allied industry, 7.8 billion profit for last year. That's seriously some good business for last year. I would say congratulations. But the bigger story I see here is the Lagos 5-year agri and food systems roadmap. I think to some extent we can cut Lagos State some slack, by the way, in terms of how they approach it. This is a state that has little or no land to do agriculture in terms of farming, if you ask me. But Lagos State is using the little that it has and trying to have a roadmap. And you're surprised that states that are all largely agrarian, 99.9% agrarian, they can't even talk about the roadmap for agriculture and food systems. So Lagos is considering, how do I feed 20 million people? How do I reduce my own food import bill, even though I have a seaport sitting in my backyard and all of that? So I give this to Babajide Sanwo-Olu's administration for this particular roadmap, which had taken a couple of years, I was aware, in working with the private sector to put the plan together. So it wasn't just Lagos State civil servants that put this plan together. It is in conjunction with so many private sector folks that has this roadmap. They put all the thinking cap together. They work with the Ministry of Agriculture and Rural Development for Lagos State, and they're able to put it. I think every 36 states of the Federation of Nigeria should have something on this right on their front. Good news for Access Bank in terms of what Moody said yesterday. It will support the Access Bank's profitability. There is no negative impact on Access Bank's asset quality, as well as the capital buffers which it has. So it's going to be good to see BancABC Botswana. What I want to say finally on this particular deal is this: when Ali was speaking about President Uhuru Kenyatta going to Congo, because look, I haven't seen any Nigerian president or government official follow these banks and visit the countries where these banks are making acquisitions. And I'm totally disappointed, and I'm saying this is a public forum, it's going to be online, everybody can watch it anywhere in the world, that we need Nigerian top officials, even if it's the central bank governor or the minister of finance or minister in charge of industry, trade and investment, which I believe should go to Botswana, for example, to have a meeting with his colleague there, or the minister or the vice president or the president of Botswana. They should go to South Africa, where Access Bank is also making another acquisition. Look, it's all about goodwill. It's about promoting your country. It's about being there. Look, we're not going to go and take over South Africa, but to say, look, thank you guys, we have one of our banks. It's like getting married. You know, you go to the woman's, your in-laws place and say, well, thank you for giving us the bride and what have you. And then you have some tea, coffee, have some photo ops and what have you. In that particular situation, you'll be surprised to see how further investment deals you can secure or talks that can open up. But these are Nigerian banks. Look at Access Bank is done Rwanda, it's done, it's going to North Africa, it's done South Africa, it's done Central Congo DRC, and it's all silent locally here in Nigeria in the news, in the media, except Access Bank reporting it as a listed company on the exchange. Did no Nigerian government official say a word? It's amazing that it doesn't look like the private sector is an orphan. And I don't like this feeling I'm getting. And I think maybe this will make a change. This will change some point. The government needs to come out and seem to be supporting the private sector, especially when there are massive cross-border investments as this. The government spoke so much about the OCP, the deal with Morocco's OCP in terms of phosphate, fertilizer, ammonia, whatever production. But when it comes to the banking sector or other private sector, they don't say a word. It looks like, well, they just keep quiet. But NNPC went to, the Minister of Petroleum went to Morocco and signed a deal with the Moroccans for wilderness, and it was all over the place. Then Access Bank went to, did the South African deal, now doing the Botswana, did the Congo DRC deal, whatever. And it's all quiet. Not a single word from any government official in Nigeria. That's not good at all.
Nigeria is probably busy with the oil price, boss, and let's just move on away to the Southern African markets. Well, Anglo-American first quarter rough diamond production falls by 7% to 7.2 million carats. Motors gets approval to buy 40% of Renault South Africa for 250 million rands. Kumba Iron Ore total sales rise by some 4% to 10.3 million metric tons in the first quarter of 2021. And Anglo Gold now, we've got Regis Resources saying that it's 30% partner at Tropicana Gold Mine. In Zimbabwe, you have PPC reporting 10% surge in sales for 11 months to February. We've got quite a number of resource stories here for you, Ali.
Yes, it's a resource headline. Yeah. Just to touch on diamonds, diamond prices have rebounded after a very big dip last year. Also lifted Botswana considerably. I think they reported a surplus on their balance of payments, and it was largely driven by this rebound. So I think if I look at the diamond market, it looks to me reasonably solid and has recovered. We've seen a lot of news around car production in South Africa and in other parts of Africa. Rwanda with Renault, Kenya also has made some announcements. And obviously the car companies see this as a big opportunity to localize production and manufacturing. And, you know, therefore, it seems that Motors has got quite a good deal there, 250 million rand for 40% of Renault. Seems to me quite an attractive transaction. Iron ore, of course, has recovered considerably. Total sales rise 4%. That's probably, I would have expected a stronger performance given the demand that we're seeing. That Zimbabwe detail is very interesting, right? PPC reports 10% surge in sales. That's implying that the economy, you know, cement has a high correlation with GDP. And I think maybe that's the sort of data point that the finance minister is looking at when he's taking on his president and disputing what the GDP rate's going to be.
Thanks a great deal for those, Ali. Bosun, any additions?
think I love the iron ore story and the mining resources. Again, you can't take anything away from these markets right now. The whole sentiments that the global economy will recover, but again, a bit of concerns in India and Japan because of the virus infestations and what implications that will have for everyone in that region and the rest of the world. The global supply chain hasn't really recovered, by the way, but we're optimistic that with things tapering a little bit in the Western hemisphere, we'll likely see a bit of these base metals and others coming up gradually. Look at the sales of diamond; it's also beginning to touch up a little bit. Well, you know, we're not seeing 2019 pre-2020 levels yet, but I think there's some measure of hope and optimism somehow as we wrap our heads around how to grab the virus and handle it and move on with our lives.
Appreciate that, boss. And let's now close the show with the Northern African headlines. And you've got EBRD, the European Bank for Reconstruction and Development, in the news again. Of course, always in Egypt, the northern part of the continent. Egypt solar plant gets $114 million from EBRD, AfDB, and Arab Bank, and of course, OPEC Fund. Egypt Aluminium eyes 138.3 million Egyptian pounds in profits. While in Tunisia, you've got Tunisia's Assurances Maghrebia reporting a turnover of more than 12.8% in the first quarter of this year. Attijari Bank posts net banking profits or net banking interest of 129.9 million dinars. Libya government transfers 1.05 billion dinars, equivalent of $234 million to the national oil company. And of course, Sirte Oil is looking to cut output by 100,000 barrels per day on the lack of funding and of course access to some spare parts in that country. Let's hear your thoughts on these headlines, Adi, especially the Libyan story, which is something that relates to oil price, crude oil again.
Yeah, I mean, I've been listening to the reports coming out of Libya, and obviously they're struggling with production. There seems to be a lack of liquidity in the system, and maybe this transfer of $234 million is attempting to shore up the liquidity position. But you know, just to mention that Libyan oil is very sought after. It's very sweet. It's very easy to refine. And therefore, I think the question arises, you know, how much cash is needed to resolve this matter, to get their production levels up to where they want it to be. Interestingly, Libya is playing quite a central position in the geopolitics of the region. You've got these rebels, the FACT, who seem to have been extremely well provisioned. I saw some footage out on Twitter, and they look as if they're very well equipped. And it seems to me that, you know, Libya, which has been in the middle of this proxy war, they seem to be provisioned by Haftar and probably Putin. And therefore, the situation in the situation post Idris Deby becomes very dynamic, because I think you've got a proxy situation here between Russia and France. You've got Russia coming from the north, probably supporting these rebels, and from the south, from CAR, and you've got Deby Jr., Sirte and Macron, who's going there for the funeral, in the middle of a pincer. So keep an eye on that, I think.
Thank you very much for this, Ali. Bosun. Well, I think this solar power plant business deal in Egypt is one big news. And as we have always said on this show, as everyone knows, look, foreign investments go to where it is best romanced. If you don't know how to romance it, it's not going to come, and it's not going to stay with you. So for this nearly $120 million injection of funds, and look at those the funders here, the EBRD from Europe, the Arab Bank from the Middle East, the AfDB from Cote d'Ivoire, and OPEC Fund for Development. Now, so, which means that even OPEC, which is still producing dirty energy or dirty fuel, is interested in solar plants. Now, we're not getting this kind of project done in Nigeria. I'm sorry, with due respect, we're out of the loop. We're not in the room where this conversation is happening. It's as simple as that. Now, this tells you something, Temple and Ali. Look, if you have the combination of this DFB finance funding sources that is mixed across regions, from Africa to Middle East, so OPEC, excuse me, you can't get better than that. You can't, you just can't get better than that. And the volume of what will be produced, it shows the confidence that these DFIs don't, these guys are not politically allied with it. Look, they want to see the best. They know what this solar plant will do in raising the economy, the industrialization, the productivity, job creation, everything with Egypt. So we need to see more of these in countries that are much bigger with so much more potential like Nigeria, like Egypt is doing. Congratulations to them in Egypt, to President Al-Sisi and his team, by the way. I'll give it to them. Probably Africa.
Oh, add a couple of comments. I sense a tremendous frustration on your part, which I believe is entirely justified. And you know, our policymakers need to have joined up thinking. They need to be able to present these opportunities in front of these DFIs. No DFI is going to be sold on something unless they can be given an enabling environment. They're being told that they will be facilitated, and they're excited about the opportunity. Now, you look at someone like Egypt, similar population, over 100 million, yourselves. And I think the point I'm taking away from you, and I listened to your earlier point about marketing, about the coattails of transactions that are happening, is that the government has not invested in the economic situation sufficiently in Nigeria. If I were them, I would pack them off to Egypt for 6 months and tell them, go and see what these boys are doing, and come back and start doing it here.
True.
The tutorial masterclass.
Yes.
It's a masterclass. Yes. Yeah. Take them all to Egypt for masterclass. Put them in the desert for just about 3 months or 6 months. Let them go and learn at the fruits of the pharaohs, at the pyramids.
Clearly, the crop of political actors we put in power really matter, actually. And I think on the way to change that before we can have this sort of different. Thank you, gentlemen, for being on the show today. Thank you for your wonderful analysis. Lee Kansachu, the founder and CEO of Rich Frontiers in Nairobi, Kenya. I appreciate your insights. Both an executive editor here at Frontier Africa Reports. Thanks a great deal for your editorial. I don't want to say frustration, but but thank you. This has been the show for this week. The last edition for this week precisely. Temple Ashaji, of course. I'll see you next time. Bye for now.